The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Tiger Technicians Hour. Let me just get the chart corrected. There it is. Okay. So we're looking at the Dow up 125 on this Wednesday, the 18th of June, already past mid-month. We're looking at the Dow up 120 at 42,336. You can't see very much here because it's been a sideways rectangle formation that was slightly above the high of about the 19th of May. That was at 42,642. We went to 43,115 about 6 sessions ago. The doji candle at a peak dean. We've pulled back. We've remained short this from that Thursday. We're very lucky to be able to get that position. And then you had the overnight smash to the downside, and then a bounce the following session that Friday. So this is very interesting because as I see it, we're stuck in this range, and until we break out of the range by going above 43,250, or that'll be very positive, or below 41,800. I'm going to call it 41,000. The 200-period moving average is really 41,769. Below that, and we started to get a different perspective completely going into the end of June. And the weekly chart still very strong. Monthly chart still strong. I'm going to do this quickly because there are a whole bunch of questions I want to get to here. The S&P is up 18 at 6,001. Nice that it's over 6,000 again. The 9-period, just like the Dow, the 9-period moving average is still very strong. To get that negative, you'd see about, I would put it at 50, right there, underneath this low right here. And that would change things completely. Right there, under the low of the 5th of June, which is 59.21. That's points below. I'd even say on a short-term position, maybe underneath, I'd say 50, 58, 90, somewhere around there. All right, so in the meantime, back at the ranch, what we're looking at is, no, don't tell me I just lost my internet. No, everything's working. Good. So I just need to check. Yep, that's working. Good. Sorry, I'm working remotely and I just have no idea. Oh, no, I have. I must see what my engineer says. This is not good. Sounds like and I'm stuck there, and this. Okay, I got this, no internet. Connected. I am connected, so I'm not sure what's going on. Let's try that again. I thought I had everything set up. All right, frozen. So as I'm doing this, there are a couple of things I can talk about. So within the context of the Fed, I'm not sure how I'm going to get this back on. Let me just go back to here. I need to see, I don't see anything in the den, so I have no idea whether I've lost internet connection. This is not good. Okay, try it again. Why is that happening? This is terrible. Gosh. Got no internet connected. Okay, I should be connected. Everything's fine there. What do I need to do? I have got that. Okay. I think we're back. Good. Okay. Yep, we're back. All right, whatever it is, we're back. QQQ. Trading right now. Up $1.76 at 530.98. This is like a peak C1, C2. I don't think it's too usually technical Friday. We'll get into that. It'll be Friday. Tomorrow's a holiday. IWM, Russell 2000, small caps trading up $1 at 209.59. pretty good action. It's stuck on the 200. Look how important that 200, that orange line is, that 200-period moving average. Just stuck there, not going anywhere. SMHs, the SMHs, semiconductors, trading up 222 at 263.85. Look at that V-shaped pattern with the 269.66 high of the week of, that was the week of, where is it? Week of 24th of January. Slumps down to 170 to the 200-period moving average. Look at that weekly 200-period moving average. Acts as a springboard. Whoosh, we go all the way up. Now, this is now leg B, but we haven't broken above the 269.66. We've gotten real close at the 264s. All right, so there's the semiconductors holding well. Now, when you look at these charts and you listen to the news and you think that the Middle East is just a tinderbox, right? I mean, this is amazing that the market is holding up so well. In fact, let's go to the crude oil and look at the crude oil. And the crude oil is trading, now it's down 63 cents at 72.67. Well, is Iran going to make peace? I don't know. Well, the most important thing right now is the price is the price. And this is a technique that I've used for years and years and years. I take a trend line and I see if I can make a little miniature trend line as well, a parallel, like a channel. And in that channel, when the price runs up and then it stalls, that just tells you that's the area that's the repellent area. When it breaks above it, it becomes a propellant area. So if crude oil in the next week or two, could be hours, but in the next week or two goes to the 77s or higher, that's a breakout. I think that'll start to impact the market quite, it'll be deleterious. So now let's go on to bonds. Bonds right now are up a half a point, so yields coming down. That's very nice. And so that's an important factor. What am I missing here? I'm missing high-grade copper. High-grade copper is trading up a little bit, up 0.01, just stuck in the lower part of the range, hasn't done anything yet. Now, this is going to be very important. So a couple of questions came up, but I want you to do this. Look, here's VT. It's amazing. This is the Vanguard Total World Stock ETF. The United stocks are at 49% of it. All-time high area. It's been at all-time highs over the last week and a half. It's done that a couple of times. And right now it's at 125.32, up 51 cents. And the high was right there on June the 6th? No. June the 11th. It hit 126.72. Might as well just put that in there so I don't have to keep 126.72. I mean, that is remarkable, isn't it? Okay, there you go, 672. And if you're listening to the news, you just couldn't believe that this is going on. Now, there's another factor that I want you to go to, and that is the FXI. I was asked about that yesterday. I didn't have a chance to do it. I think I might have done it. But the FXI, which is the iShares China Large Cap ETF, it is important because China at this particular point is under pressure. And you can see it on this chart. Look, down 28 cents at 35.96. Oh, let me just make that. I forgot. I typed that in the other day when I was asked about it, and I completely forgot to look. This is called the Chapman Wave Unconventional Fact-Based Restart, and it says to the 34th. If I'm correct in this pattern, then the iShares, the FXI, trading at 35.95 should drop about 2 points to get to the 34s over the next week and a half, going into the end of March, end of June. I'll be right back. Basil Chapman, Technical Hour will be right.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
We're back, so the E-mini has gone quite a bit higher. The E-mini is up 27 in leg B in the 1-minute chart, leg D in the 5-minute chart, and we're looking at leg C in the 10-minute chart. So this is really positive. I don't know what the market's expecting the Fed to say something about lower rates, but we'll see what happens. That's now leg D in the 1-minute chart. So, okay, let's get back to our story. I just wanted to mention again that this is a particular technique. Maybe on Friday I'll do a little bit more with it. That after the instant restart, if it makes lower lows, but you're still making higher highs as well, it's this very choppy, spiky move to the upside, but eventually it comes back down to the lowest low that we've made recently, which is in the 34s. That's for the FXI. That also says the upside right now is somewhat limited, even though it's a peak B. All right, let's get to the next. So I had questions. ALAB. So this is a question I had. And correct. So let me just go through this. Yes, correctly identify Chapman instant restart right there. This is Astera Labs. It made a high on the 8th of May at 73.81. Next day, the high was 81.27, but the following day it gaps up, so that's a peak D, going to a new higher high. So you call it E/A, F/B, and a G/A. But look what happened. In the interim, it's gone sideways. It's having it's up $3.44 today, 96.38. And I said yesterday that it's stuck in a range. I couldn't really tell anything, maybe a nibble, but more than that, I couldn't do anything because it seemed to be stuck in a range and it could stay in that range. But the range says that it could very well run to the high that was made with 100 round number open on the 29th of May, and it goes to $100.19, and then it comes back down the following session, gaps down. Now you've got your border, but look what's happening. You've got a rectangle formation. So all I was saying is that it could go back to that 100 level and then come back to continue in this rectangle for quite a while. So that's where was an entry point? I guess I was wrong. Yeah, entry point would have been yesterday for a move from the 93s to maybe 99. That's 6 points. That's a pretty nice short-term rally, but I think you were looking longer term. So what I'm looking at is the weekly charts held very well. This was an IPO back in 2024 in the 60 area. It popped up to the 90s, pulls back all the way to the 38s, and then it screams up to this level, which was at 140 double top, exact double top of December. It goes to 147.36, and in January it goes to 147.39. And then it tumbles down again. So this is just in a range, and all I can say is that it's in a micro range right now as opposed to the macro range. Where would I consider buying? I like the way the weekly chart is moving sideways, but if it takes another bar to go sideways, it says, probably you have to pull back before you can go up again because you've used up the energy to the upside by just going sideways. So all I can say is I still feel the same way. I would hold off. I'd be patient. I'd try to wait for a move to below 90, between 90 and 87, and then give me a yell. We'll have a look at it together because that's the moment. If it goes under it, it's probably going down to the 81 level to the 200 pre-moving average. But the way it's held so beautifully in the weekly chart, the monthly chart is just too wild. It's like a zigzag. But the weekly chart is very nice. So it says that it's not a circle. I have to treat it as a rectangle. And it said that this rectangle here is a little miniaturized because you've got the same thing in the daily, and both of them are referring to a breakout to the upside. To 102 is a break to the upside, and that's where it's really positive. But you want to get in before that. So, okay. Now, while I'm looking at it, I've made up my mind. Because you've already got a position, this would be a trading position. I don't want the trading position to decapitate your overall entry point so that you've got a cost factor that is now much higher than it was in the initial thing. So I'm going to say on a trading position, because this is the only way you can get a real feel for it, because I still think that the market's going to be under a little bit of duress over the next week or two. And this might participate just the same as the market. So start a small position right here at 95.87. I'm only anticipating that there's a chance of a 2 to 3 point move up, but it is making slightly higher highs and higher lows, and that's important. But it's a trading position because you want to see where would I add another chunk rather than just messing around to the core position. So treat it as a trade, 96, 97 right now. I would have I'd have a tight today's lows, 92.50. It's trading at 96. So you get yourself a 3.5. I don't want a 3-point stop. I'd have a 2-point stop on this trading position and make it a trading stop. And if you get this position, let's look at it together either Friday or Monday. But I do need to see a break into the 100 and 250 area. That'll be really positive. And on the downside, a break down under 88 says you got a bit of a problem there, shorter term. All right. Next question was ICLN. So the ICLN is the, where did it go? This is the iShares Global Clean Energy sector, and it's trading right now at $12.80, up 7 cents. It went to a peak D over the previous peak D, and it's now back in this range, the rectangle range. So if this is the clean energy and it took such a dive, all I'm going to say is that I would treat this with a lot of respect. I would say, okay, I don't really want to be in this. I don't know if that was I can't remember now if that was the question. I think it was just to have a look at it. And all I can say is that this ICLN, this is the iShares Global Clean Energy ETF, is just kind of stuck for now. The weekly chart doesn't look all that bad. It's a horrible candle, but it still looks pretty good. I'm just saying I'd be watching this at this particular point. I don't think I could go long or short. If anything, it looks to me like it wants from the 1280 level to test the 1240s. over 40 cents, I don't think I'd do anything. I'm just watching this closely. If it can start to treat the 1244 level, which is the 200-period moving average, as a support level, that's something else entirely. Hope that helps you. Next question came in, which is the UVXY, which is there we go. This is called the ProShares Ultra VIX. Right, yeah, Ultra VIX short term, I believe. Yeah, short term. It looks like the volatility index. So let me just do this here and show you the VIX itself, VIX.X. Keep your eye on this left side chart. Same chart, right? Different prices. This is trading at 1983 down $1.77. So, and the 9-period moving average yesterday flipped positive and is still positive. So this is what I'm thinking. Now, this is going to be very important. The UVXY is the trading. This is the way you can trade the volatility index. And as it stands right now at 21.51, down $1.02. Yeah, I won't rush it. We'll come back, and I've got a bunch of questions that I need to get to as well. Basil Chapman, Tiger Conditions Hour, and just real quickly as we go out, INDU, what is the Dow doing? It was up 100 before, up 264. Good action.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi, folks. This all ties together. So I had there's a question on YouTube. Am I seeing a potential SPY short trade for short-term insurance, or is it more an intermediate trend change? So if you're looking at the SPY itself, and this goes to I'm getting to the UVXY, which is based on the volatility of the market. The 9-period moving average is still well over the 14. If I didn't know that there was this conflagration in the Middle East going on, and if I didn't know that the Fed was speaking today, my thinking here would be that this is still holding really well. That you're anticipating something, but it hasn't happened in the chart, which is kind of what I'm anticipating, that it is going to happen in the chart. Looking at the Dow, the whole thing together, looking at the Dow is self-building. No, I lost that again. What is going on? I can't believe that this is going on. Okay, there it is. So there's the Dow up 270 points. You can see it doesn't look all that impressive right here, but this is a big move. And if you look at the QQQ, the 9-period moving average is like the S&P, still very strong. And if you're looking at the IWM, not quite the same, but I have to, instead of, actually it's done very nicely now, up to 24. I have to look at the SMHs. The SMHs, semiconductors, are up 3. They should really be much more than that, but it's still pretty good action. So this is an anticipation. And the reason why I said that we already are short the Dow from much higher up. So we've got a lot of room there. We don't have much room here in the S&P itself. But what I am looking at here is that the way that the sideways move has unfolded says that either right now we're about to break to the upside. I'm not sure what will do that, but we could break to the upside. And if I'm looking at certain stocks, for instance, let me stick with this right now. There are certain stocks that are almost at all-time highs. And as I said, the VT, the Vanguard total return, world market total return, is almost at all-time highs. So I'm looking at this as a potential short-term trade that has potential to do something else. But first, it has to work as a short-term trade. And it's a very difficult instrument we're using. Is actually a very difficult one because it has a pretty decent wide range of percentage moves intraday. And it shouldn't even be where it is. It should be much higher than it is right now. And that's just saying to me, something's not 100% right. So I'm treating it as a short. I've got such a tiny percentage. I always at a 1%. I've got less than a 1% stop on it. That for a 3 times short, I mean, that is nothing. So either going to be working perfectly or we're in and we're out, just like that. So I'm not going to get carried away with that. That was a move based on what I'm anticipating as things that are going on, aspects of the market that are not quite in sync, and that the market should be still digesting these big gains that it's had, and that's what I'm anticipating. Now let's go to the UVXY, and I'll explain what I'm looking at there. UVXY, which is the volatility, this is a trade. That's again. Is there something going on here? I'm not sure if it's me, but I'm watching the Tiger YouTube. That seems to be working okay. Experiencing check the internet connection. And I'm especially getting an internet connection that I usually use a portable one that I carry with me wherever I go. The only reason why I have it is insurance, and for some reason I forgot to bring it. UVXY. So I'm explaining to you what I'm looking at in terms of the UVXY. So the UVXY, and no, I'm still okay. Everything's good. So maybe it's just that we've slowed down here. It can happen sometimes because there's a lot going on in the market. I'm anticipating if the UVXY pushes, I can't give you the number right now, just off the top of my head, I can't remember the number. I can actually remember the configuration really well, but not the numbers. Is that going to work? Is that going to work? Let me just check here. Am I able to switch? No, that's not working either. Your stream is still running. I'm talking, but I'm not able to. Oh, there it is. Okay, UVXY. Trading at 21.29, down to $1.24. If the UVXY starts to break above, first of all, yesterday's high, which was 23.17, that'll be really important. But if at any point in the next between now and Monday, it starts to trade, not just break, but trade above 23.74, that was the high of the 13th a couple of days ago, then all of a sudden the 200-period moving average of 26.10 becomes a target. Now, what would do that? Maybe crude oil spikes higher. Maybe the Fed says, yeah, we are thinking in terms of rates, but the data that we're looking at still doesn't give us confidence in doing that. I don't know what they say. Or they say, you know what? The next move will be a rate cut. And then the market just powers higher. We are long positions. I would love for it to go higher, but I do think that it deserves some kind of a digestive phase. Yet the chart, when you just look at the chart itself, let's go back to the SPY. SPY now is trading up 357, up 0.6% at 601.08. Nothing wrong with that. So to answer the question in Tiger YouTube, I'm treating it as a potential trade. Next question came in, could I look at MOS? That's the Mosaic company, also trading very nicely, up 38 cents at 36.54. It looks like it wants to retest, or it wants to test the high that was made on the 4th of 37.69. Funny. On this pullback, I said, I loved it before. I spoke about it. We did own it at some point, and then I just watched it climbing. And I said, the weekly chart is much better. It's improving. That monthly chart is horrible, but slowly but surely, a lot of action here. Now, for the first time, the monthly chart 9-period moving average has gone positive for the Mosaic company, phosphate and potash. Potash, wow. I mean, this is doing very nicely. So my first target would be, how does it handle the high that was made on the 4th of 37.69? Key support is at 35.20. And even more important than that, it pulled back, and the 9-period moving average refused to go pink. It's still green. That gives it elastic band push to the upside, and the MACD is weak. The relative strength is okay. Stochastic's weak, and the on-balance volume is good. So that's what I'm looking at. The U-shaped pattern says, how does it treat that if at any point in June it starts to trade at 38. That is a really big break to the upside. Leg B in the weekly chart will be important. I'll be right back. I'll tell you what the Dow is doing right this moment, because everything's back on track. The Dow is up 278.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back, and I had a question about AIQ, which is the Global X Artificial Intelligence ETF trading at 42.22, up 28 cents. I had a target for it last week to go to the 42.78 high that was made back in February, the week of the 21st of February of this year. It's just missing it, but the question about it is this. So we have a core position from way, way low. Then we have a trading position, really from the 35 to 36 area. And it's now trading at 42.25. Took a little bit off. But most importantly, I think that this sideways consolidation is telling me that it's, in a sense, it's a little bit like distribution. The only way that changes is if it suddenly goes to 43.75 to 44, 43.75. Yeah, it really has to break right out into the 43s, 43.60 even. 43.60 to 44.25 says, now I'm in fresh territory, all-time highs. That's going to be important. But most importantly, the way it's going sideways says it has tremendous support between 41 and 40, maybe 39.80. So 3 points, less than 10% risk at this particular stage. So I'm looking at it and I'm saying, if you are in it, I just keep holding it. This is the Global X Artificial Intelligence ETF, AIQ. It's doing very nice. It's not doing as well, considering that it is the Global X Artificial Intelligence ETF. I would have expected it to be up in the 56, 63 area. It's not. So, in my mind, it's lagging, even though we're long and it's done very well for us. But it's not where it should be. Okay, next question came in. Could I look at, where did it go? Right here. Okay, I did that. Okay. All right. Yeah. So I wrote it down just so that I can keep ahead of the game here, with that, in case suddenly I lose the internet. American Express, AXP. American Express trading really well. It's up 5, almost $6 at 298.75 in this rectangle formation. Maybe Friday I'll remember to do this as a little lesson in the large rectangle formation, saying if you come sharply low and go to higher highs and higher lows in a stair-step way, you can go to a peak D just underneath the previous high, just on it or just over it, and then you've got to be careful not to break the halfway marker, which this did. It went to peak C1, C2. That acted like a D, and it just was like a penny or two above the previous high that was back around about the 13th or so of May. But the weekly charts improved a lot. Monthly charts look good, made a peak D, and it's taking a breather. So American Express breaks out if it can start to trade in the 305 area anytime in the next week or two. Key support is 280. You really want to know what the parameters are. Hope that helps you. Next question came in, Honeywell. Honeywell, HON is the symbol. Made a peak E with a doji candle around about the 229 area, trading at 222.52 right now. 9-period moving average just flipped to pink, negative, but the chart itself is still saying, hey, it holds really well until it takes out on a closing basis this low that was made on the 23rd of May of 220.82. Yeah, if it closes under 220, it's going to go a little deeper. Then you might even have to think 213 is the 200-period moving average. Not going there yet. I'm just saying that would be the action. A close above 227, so 220.65, anytime in the next week says, oh, stalling. It's just in a rectangle sideways movement. Next question came in. Could I look at, I wrote it down. There it is. SIL. Oh, yeah, could I go through some of the big caps, tech stocks? Okay, so here we are. So Microsoft is trading up 87 cents at 478.88. You know, it's at almost all-time highs. We're along from 338. We have a small core position left, and it's at all-time highs, or close. It's broken out in the monthly charts, broken out in the daily, and the weekly charts only in leg B. And that's just saying to me that there is buying in certain areas that Microsoft was in the tech sector was the longest out of the Mag 7 to take a breather from the 468 level all the way down to the 344 near the 200-period moving average back on April the 7th. And then it started this big move. And now, in a sense, it's become a leader. And that's really what you need to be looking at here. For instance, NVIDIA also almost at all-time high. It's at 145.24. It had two round number highs of 145.00. Then it went to 146.18 a few sessions ago. This is acting really well. All-time high is 153.13, and it's trading just a little bit below that. But what you've got here is this is completely different to Apple. Now, Apple might be up today. It's up $1.62. That is not a great chart at all. So I thought I'd just do that. There was a question about it. Oracle, I spoke about this the other day, just out of the blue, like Ellison's sailboat or yacht. Swoosh! Just took off in the wind. It's at 213, 214 right now, up $5.77. Almost all-time highs, acting extremely well. And that's another reason why I'm saying that the consolidation that I'm looking at here is in the sense that it's market-wise. There are certain sectors and certain stocks that are doing so well, and they are. Oracle is very important, so you can't just dismiss it. Cisco, how about that? Cisco. Trading beautifully now, almost all-time highs at 65.96, up 62 cents, 65.95. So when I say that I'm anticipating some kind of a pullback, it has to be timing, and the timing has to be perfect, because we were lucky to get that in the Dow just before the big tumble Thursday night into Friday. But at the same time, what I am looking at here is the strength. I cannot dismiss this kind of strength in the semiconductors, which lead us up and lead us down, holding so well. Can't dismiss it. It's really important. Next question came in. I'd mentioned W yesterday. I believe it was yesterday. That's Wayfair trading up $1.18, 49.48. It did get to that leg D we were talking about. Here's the left side, right side price time match. And that in the weekly chart, the highs that remain a little triple top that started off on the week of the 31st of Jan at the 51.16 area. Well, right now we're trading at 49.47. And I think that this is the week that you've got today and Friday to try to tag that. And that would make this V or deep cup formation test. And if Wayfair actually starts to trade in the 51.20 to 52.30 area, actually trades, it doesn't just pop and then drop, but it starts to trade there or higher, that would be really important. That'll help the weekly chart enough to say, wow, finally you might be impacting the monthly chart, which is just horrible. So that's Wayfair. W is the symbol. Next question came up here. I just wrote, HMY. HMY, wasn't that a radio company? The records, HMY. Harmony Gold, South African gold miner. I had a target of this left side, right side price time match going to next month to the to the high of way back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97, and with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yeah, so the question in the Tiger YouTube was about the grains, about the commodities in general. So BG is the other one. Bungie Global once had it. We haven't got it now. It's done really nicely, gone from the 74s to 86 over the last week and a half, looking very good. So yes, this particular area, Moz is one of them. This is in the phosphate, Mosaic Company, doing nicely. But now BG, let me just look at the chart formation with BG is still in its growth phase. So peak A, B, C, D, E in the weekly chart. At this particular point, if BG at 86.39 is able to get to the, let me just check this out right now. Yeah, if it can even tag 87.90, then the 200-period moving average of 88.92 becomes a target. Hope that helps you. So just before we wrap up, because this is the final segment, I won't be here. No one will be here tomorrow, of course, but we're back on Friday. I'll be doing a show. I believe I'm going to have to do it early in the day at 8 o'clock for a rebroadcast. That's the way it looks right now. So the Dow's up 264. This is really good action in the Dow, but the Dow chart doesn't look anything like the S&P, which is actually quite a bit better. S&P right now trading up 29, almost $30 at 6,012. So this particular pattern at this point, the longer it goes sideways, the greater I can look at it as distribution. So that means that in the next, between today and Friday's close at 4 o'clock, if it's able to sharply pierce the resistance, there we are, of 6,016. No, let's go to the, 6,060. If it can go above 6,060 by Friday afternoon, that is a really good breakout. But if it really slides sharply, the end of the day today, because of the Fed speak, then I think we get this digestive phase, and it's rotational. So have a wonderful day. Stay tuned for Steve Rhodes. Check out my opening call daily newsletter, and I will see you on Friday. Have a great